Okay. So hey guys, today I'm going to talk about blockchain, DAOs, and what they mean for you. This is going to be a good video for people who know a little bit about crypto but can't fully visualize what the blockchain is. I'm personally still learning about all of this, so I've tried to mention things that were most helpful for my understanding, but we're going to quickly explain some blockchain basics to get everyone caught up. And then we're going to go in depth about DAOs, which are Decentralized Autonomous Organizations. So here's a list of a few of the things we're going to get into, but we're also going to discuss DAO attacks, DAO voting methods, DAOs in business and politics, and choosing the correct type of DAO for your needs. So to get started, we're going to break down the blockchain. And simply put, blockchain technology consists of storage units or blocks of highly secured data. Think of it like a digital file library in your head. So the blockchain ledger is an accessible list of transactions that are distributed across the entire network of computer systems on the blockchain. The information is stored in blocks, and the systems or computers that file the blocks are called nodes. The details of the transaction are stored within the blocks and then kept on a peer-to-peer searchable ledger like Etherscan. DAOs are an effective and safe way to collaborate with people around the globe. Think of them like an internet-native business that's collectively owned and managed by its members. They have built-in treasuries that no one has the authority to access without the approval of the group. Decisions are governed by proposals and voting to ensure everyone in the organization has a voice. Everything is out in the open, and the rules around spending are baked into the DAO via its code. They can accomplish the same thing as traditional companies and organizations, but they don't have a hierarchy where only the top few members can control things. Instead, every member can vote on each decision, making the organization owned and run by its members, who are all equal. There isn't room for any tampering with votes or messing with finances. Everything is secure and automatic. So we're going to dive deeper into DAOs and why they can be important in your life, even if you aren't heavily tech savvy. So like we said, DAOs are highly secure and there isn't room for corruption typically seen in traditional organizations. All the members are there because they genuinely are passionate about what the DAO represents, and everyone has to do a part to earn their vote on the DAO where finances and decisions go. So DAOs are really cool for people who want to make a positive impact in the world while still going to their daily jobs. DAOs make it so like-minded people can collaborate on passion projects around the world. They can be total strangers, but you can trust them because of the security of the blockchain protects you. So DAOs operate using smart contracts, and a smart contract is a computer program or transaction protocol which is intended to automatically execute, control, or document legally relevant events and actions according to the terms of a contract or agreement. So after all the members of your DAO vote, the smart contract automatically takes those results and implements them so no tampering can happen. And this can have larger implications in the world if we eventually start to use it for real-life political elections, as no one will be able to claim fraud and it will be way more efficient. So as you can see here, the typical corporate structure is this top-down hierarchy where the big guys control all the funds, the assets, and decisions. In the case of a DAO, everyone has a voice and sway over the direction the company goes. So there are different types of DAOs, and all of them have their own pros and cons. It really depends on what kind of organization you want when you're picking which type will be best for you. Moloch DAOs exist as a collection of membership shares. A member is anyone who holds a number of shares, which represent voting interests. One share equals one vote. So each member's voting power is proportional to her percentage of overall shares. This means if one member owns many shares, they will have way more sway in the organization. Unlike the other projects discussed in this article, Aragon is way more focused on providing a secure and versatile backbone for the formation of general organizations. They are for sure the most popular type of DAO, and they give you the tools and allow you to easily customize your organization. By leveraging the foundation built by the Aragon team, end users only need to use the tools provided by them to quickly form an organization that meets their specific specifications. All this means is Aragon DAOs are highly customizable, and you can choose the membership structure that is best for you. So DAO Stack is a smaller option which recognizes voting on everything can actually slow your organization down as good as it seems. So they use something called holographic consensus for voting. And this voting mechanism associates a prediction market with each proposal. Predictors can stake funds for or against a proposal they believe will pass or fail. If they predict correctly, they benefit financially. This way, you can't buy a decision, but you can buy it into consideration if you really care about it. Basically, anyone can post a proposition, and as long as people submit tokens supporting it, it will automatically be implemented within the organization. Colony also focuses on minimizing the need to vote in daily operations, but their model is more like an organizational chart where it's like, if this happens, then the DAO does this, and it's still all automatic. So we have a little inside glimpse of what that might look like here. As you can see, so there are voting extensions. So Orca DAOs still focus on one overall organization, but they split people into clear teams. It just allows more space for people to participate in niches they care about without having to participate in decisions and day-to-day stuff for the whole company. And the last one I'm going to mention is Syndicate, which is more finance focused. So this will be a good option if you're specifically looking for something like that. So there are many different DAOs in different areas. And because you may be interested in taking part in one of them, we're going to go over them. And we have DAOs that specifically focus on organization and services like Aragon, which we mentioned above. And then we have media DAOs, which fight censorship through decentralized news information. We have collector DAOs, which focus on art and crowdfunding NFTs. We have social DAOs, which focus on solving societal issues. We have service DAOs, which quite literally offer services to other DAOs. We have investment DAOs, where members can crowdfund and create collective wealth together. And this is kind of where my company, Economic Rights Movement, is leaning towards with our DAO. Lastly, we have grant DAOs, where members can contribute money and then vote on which projects they tackle together with that financing. So this is just kind of going over more in depth about them if you want to pause and read more, but they're basically what I just explained. And to move into our next section, we're going to go over some quick definitions. Ethereum is a blockchain platform with its own cryptocurrency called Ether, and its own programming language. It is second only to Bitcoin in popularity, and ETH is used as gas for most blockchain operations. So anytime you send a transaction on Ethereum's blockchain network, you're paying in ETH tokens to do so. These next ones we briefly touched on at the start of the presentation, but we're going to go more in depth about them. Blockchain is a specific type of database. It differs from a typical database in the way it stores information. Blockchains store data in blocks, and they are then chained together. As new data comes in, it is entered into a fresh block. Once the block is filled with data, it is chained onto the previous block, which makes the data stored on the blockchain. But the most common use so far has been as a ledger for transactions. In Bitcoin's case, blockchain is used as a decentralized way so that no single person or group has control. Rather, all users collectively retain control. Decentralized blockchains are immutable, which means that the data entered is irreversible. For Bitcoin, this means that the transactions are permanently recorded and viewable to anyone. The term node is being used mostly in relation to blockchain, a decentralized digital ledger that records all cryptocurrency transactions and makes the information available to everyone via a connected device. What this means is that every transaction has to be chronologically recorded and distributed to a series of connected devices. These devices are called nodes. These nodes communicate with each other within the network and transfer information about transactions to new blocks. So scaling in the context of blockchain refers to increasing the throughput of the system as measured by transactions per second. Obviously, if you have tons of transactions going on, it's going to slow down and cost more money. So scaling just means that you can do more of that. Decentralized finance is a blockchain-based form of finance that does not rely on central financial intermediaries such as brokerages, exchanges, or banks to offer traditional financial instruments, and instead utilizes smart contracts on the blockchain, the most common currently being Ethereum. Polygon, formerly known as the MATIC Network, is a scaling solution that aims to provide multiple tools to improve the speed and reduce the cost and complexities of transactions on the blockchain network. So this test network allows for blockchain development testing before deployed on the mainnet, which is the main Ethereum network. Once you send something out, it's out there. So this allows you just to test it. So now let's get into some ways in which DAOs can conduct voting. Quorum voting requires a certain threshold of voters in order for a proposal to pass. So for example, once this threshold has been met, whichever decision has more votes wins. Without reaching the quorum threshold, proposals fail. Holographic consensus associates a prediction market with each proposal. Predictors can stake funds for or against a proposal they believe will pass or fail, and if they predict correctly, they benefit financially. The next is permission relative authority, and relative majority, where it's just where you compare the total number of for and against votes, isn't a viable governance option for DAOs due to the ease with which they can be attacked. So one person could easily drain the DAO's funds using this voting system. However, Moloch DAOs have a nice little feature to prevent this. Proposals need to be sponsored by DAO members in order to be voted on, which adds a security buffer. So conviction voting is a voting mechanism in which people stake their voting power on proposals, and over time, these proposals accumulate enough votes to pass. Aragon recently began a pilot for this new type of voting mechanism, which is still very experimental. The majority doesn't need to achieve consensus on every proposal. Instead, token holders can simply focus on the proposals they support. So in the multi-sig voting mechanism, token holders signal on all proposals, which are then executed by a more centralized committee who usually control a gnosis safe. And we'll get into what a gnosis safe is later. And lastly, in the system in development by colony, anyone in the community can make a motion for something to happen. If no one objects within a certain amount of time, it happens. If someone objects, then a reputation weighted vote will decide whether or not it should happen. So now DAOs sound amazing and like there's no room for any sort of mistakes or corruption, but there are some methods which can be used to attack your DAO, and we're going to review them under the assumption that you'll one day be participating in the DAO and you'll need to know how to protect it from such attacks. So the affirmative bias attack. This describes how the DAO voting is likely to exhibit a positive bias towards yes votes on all funding proposals, noting that the outcome of positive votes will be visible early on while the negative sentiment is suppressed during the voting process. So that's just something to keep in mind with voting on funding proposals. People can be swayed by positive votes in the beginning. The next is the stalking attack. If an investor decides to split from the DAO and take their ether out by creating a new DAO contract in which they're the sole investor, a potential stalker can commit 53% of the funds into the subcontract, effectively blocking the investor from withdrawing funds. So this creates the possibility of ransom and blackmail, where basically someone can hold your funds and tokens should you decide to leave. The ambush attack describes a scenario where a whale investor can sway the outcome of the proposal vote by submitting a large amount of yes votes at the last moment, leaving very little time for other token holders to back out. This just means somebody who's going to sway the vote waits till the last second so they know that they're definitely going to win and other people don't have time to put their tokens in. So in the token raid, a large investor manipulates the token price by either facilitating a panic among investors or causing net selling pressure on the tokens, leading to lower prices in order to acquire a larger share of the DAO. The extra balance attack is the opposite of the token raid. A whale scares the token holders into splitting from the DAO, increasing the extra balance and driving up the values of the token. The tie-down attack represents a scenario where voter shares can be trapped in a proposal with a long-lasting voting period, followed by a concurrent proposal with a much shorter voting period. So in this case, the voters that are trapped in the first proposal are not able to split until the end of its voting period, and they can't do it, and they can't use their tokens in the new voting period with the smaller time. So we have a quick overview of DAO tools, and I'm not going to go over them in depth since this video is already quite long, but if you're starting your own DAO, you can pause on these next two slides and see if any of them look interesting to you. And here we talk about the gnosis safe and everything. But DAOs are still a relatively new thing. So there aren't a whole lot of companies out there offering services to them, and you're going to be seeing these names over and over if you are looking into it. So I do want to go into a few important ones briefly, just because you'll almost definitely be interacting with them. For the third time, we've got Claros here right now. For the third time, I'm going to mention Aragon. Aragon is an open source software used to maintain and create decentralized autonomous organizations on the Ethereum blockchain. Aragon offers the most popular option for DAO creation. And what's cool about them is they recently partnered with Polygon to make transaction on their DAOs 500 times cheaper for members. So it does offer a real and affordable alternative to traditional organizations. Because we learned it is difficult for DAOs to be effective without scaling. So only so many transactions can happen on the chain at once. So Polygon is a layer 2 scaling solution that achieves scale by utilizing side chains for off-chain computation. And this can ensure significantly lower gas fees and more equality for voters and just more things getting done in your DAO. Gnosis aims to provide an open source infrastructure for prediction markets built on Ethereum. A prediction market is a type of marketplace not unlike an exchange, except instead of trading assets, users trade the outcome of events. Gnosis' goal is to build an infrastructure for many decentralized applications that can act as forecasting tools, sources of information, and standards for predictive assets in the market. By allowing access from any party to its platform and aggregating public opinion in an uncensored source, Gnosis believes it can build a reliable forecasting tool that can have applications for decision makers in finance, government, and insurance, among other sectors. So they put bets up to compare what people are actually thinking, like, hey, do you think this person's going to win the game or this game? This person will win. So they can get reliable prediction models based, So Consensus is a blockchain venture studio supporting projects within the Ethereum ecosystem. Consensus is a software engineer leader of the blockchain space. Their full stack Ethereum projects helped developers build next generation networks and enable enterprises to launch more powerful financial infrastructure. Consensus also offers great educational information if you're looking to dive deeper into blockchain. They have lots of great videos up that you can learn with. So if you're specifically interested in blockchain and how it relates to finance, pause here and take a look at a few of these companies that I've listed. Blockchain is incredibly important in cases where people in third world countries may not have access to bank accounts, but they would still like to start and scale a business. Previously, people in Africa were using alternatives to their country's coins like cell phone minutes to trade currencies internationally with no interference. And crypto is making all of this possible and more. If you're interested in the future of economics and these companies, they're going to be really important to look into. So we at the Economic Rights Movement chose Aragon to start our DAO because they recently partnered with Polygon, as I said, to make DAO voting and transactions 500 times cheaper than anywhere else. Second, their user interface is great for non-developers. You really don't need much experience to set up a DAO through them because they make it so painless. And lastly, DAOs are created through Aragon, and this makes your DAO most DAOs are created through Aragon, and this makes your DAO way more likely to get outside funding because of its reliability. So a lot of the DAOs out there that you'll see were created on their platform. And if you're interested in creating your own DAO to work on passion projects with like-minded individuals, first you should create a Discord and seek these people out. Then once you've fostered a community on there, you can move to DAO and use this kit for day-to-day tasks in organization. If you already have a community and you're ready to create your DAO, head on over to Aragon and we will walk you through it. So step one, you're going to select your quick node in your MetaMask wallet. You should have ETH in your wallet at this point because you will need some of that to proceed from here for gas fees. Then you're going to click on Connect Account and select MetaMask and approve the request from MetaMask. It should just be a little pop-up. You're going to select Ethereum testnet. Click on Create an Organization, and then you're going to select a template for your organization and then enter the name of your DAO. Then you're going to set the following. So you're going to pick a support percentage, and this is the percent of tokens required to approve the voting in a favor of yes. So for example, if the support percentage is set to 50%, more than 50% of votes from the overall votes have to be yes to get the proposal passed, and you can set this at anything. Minimal approval percentage. This is the percentage of yes votes required to approve the proposal from the remaining pool of tokens. Vote duration. This is the duration within which the participating members can vote. And then you're going to set up these values according to your will or refer to the image below for example values. Go to the next step for setting up your token. as you can see here, this is what their interface looks like, super easy to use. So you're gonna click on Get Started. Now let us create our first proposal question to begin the voting process. You're going to click on Voting from the left menu and click on New Vote, create a new proposal question and open it for voting. And this will be counted as a transaction as it is a write operation. And so once the proposal is live, members can vote yes or no, and the voting window will be open for the time duration set in the earlier steps. So you can really create cash flow through your DAOs in different ways, and this will allow your organization to pay and reward its members, then continue working on more projects. A membership subscription is a great way to do this. The creators of DAOs can develop a subscription model where members will pay to be part of the community, just pay to play. And then pay to earn is one of the latest concepts in the gaming world. Gamers will be required to pay certain fees to unlock various features or speed up the game. Mixed feelings about that, but protocol fees. We have already seen examples of our DAO protocols. If your DAO is a protocol, you can charge individuals who want to use it fees. Donations, a DAO can ask for donations from members of the public who would love to support their vision. Investment, a DAO can invest money in a money-making stream that will support its operations, which is probably the best way to go. Client payment, clients that are not knowledgeable in creating DAOs can contact you to create one for them. Research crowdfunding is one of the best ways to fund a project. DAOs can crowdfund and raise money to work on the core mission. So there are downsides to everything, and DAOs have a few that are still being worked through because they are so experimental. Running all decision-making through blockchain is not efficient and also can be costly. Community DAOs are more about collaboration rather than voting, and you need effective management to handle operations in order to keep people engaged. Basically, all this means is DAOs can be helpful, but they can also get super technical. It's like when you try to set up a smart home and you can say, Alexa, lights on, to save you a few seconds, but it ends up being, but it ends up being complicated to set up and sometimes doesn't work correctly. So it just becomes more of a hassle. MATIC DAO has a solution to this, so you can say that and not even have to think about the mechanics behind it. It just works. So MATIC DAO is the closest thing to a traditional company that still acts on the blockchain, and they actually refer to them as distributed autonomous companies, or DACs. These make it so any joining members have to put their money where their mouth is to join. They put in a small amount of capital for access to the community. Once inside, MATIC DAO has amazing tools that allow anyone, regardless of tech experience, to collaborate on completely secure and innovative projects from around the globe. So I think DAOs are really cool and they're really interesting because typically collective ownership makes people cringe, because a lot of the times with things that are collectively owned, it is supposed to benefit the general public, but those on top still find ways to corrupt it. And with DAOs, they may be the first true things that can collectively be owned by a group of people with equal voting power. And this has huge implications, not just on our passion projects, but on our governmental systems and the future of the world as we know it. So thanks for listening to our video, and I hope you were able to learn something from it. If any of this sounded interesting to you and you'd like to join a DAO focused on upscaling human potential through generation of collective wealth, pop on over to our economic rights Discord listed below right here. We have got a QR code and you can start to join. So thank you guys and see you next time.